Hi there, I'm Darren McDermott and you're watching Dukascopy TV. I have Chris Thomas, an independent financier, in the studio with me. So Chris, first of all, let's have a look at the US. Now we had strong payroll figures out. Is this something we should be happy about?
Non-farm payrolls came out 288,000 on Friday, with upward revisions from previous month as well. So the Fed are going to be very positive about this, and they're going to start talking positively about this in the next few weeks going forward.
Okay.
The other thing is that the jobless rate fell to 6.3%. So that's a very important thing for the Fed. Their year-end target is 6.1 to 6.3%. So we're already touching that. Now, if we look at the other side, look into it a bit deeper, the reason or an argument as to why that jobless rate is 6.3% could be that there's a lot of people falling out of the labour force participation rate. Now, the labour force participation rate is the accumulation of people who work, of working age, who actually work or who are actively seeking employment. And for that to be just 63.8%, that's not very good indeed, especially when you look at the World Bank statistics and you look at lots of other nations have got far better participation rates. So headline number very good, underneath perhaps some cause for concern.
Okay, and looking at Europe, now we had a pretty quiet start to the week due to the UK bank holiday, but we do have the ECB meeting coming up at the end of the week. And look, a lovely picture of Mario Draghi here. So what sort of tone are you expecting from him? And there's a lot of fears at the moment about deflation. So how do you think he will tackle this?
Okay, Mario Draghi and the ECB, I'm expecting unchanged on their interest rates decision and a very similar policy statement to previous. Inflation is only 0.7%, so a lot of people would argue that is a cause for concern. It could quite easily, there could be a shock to the system and suddenly you could move into a deflationary environment. So there are a lot of people calling for perhaps a rate cut or some sort of quantitative easing, which the ECB has yet avoided. However, they're probably going to sit on their hands and not do anything. They see the inflation rate slowly ticking up, and hopefully over the next few months that's going to become a lot more positive and we'll eventually get towards the 2% inflation target which the ECB have set. The other concern for the ECB is the euro dollar. Today it spiked up to nearly 139.5 and 140 is a very key level, psychological level, and many people think that the ECB should actually be talking about intervening at that point. But it's a difficult situation. Verbal intervention is not going to get them very far, and I think the ECB would rather sit and hope that it retreats very quickly. Tough call.
And now turning our attention to currencies, what sort of impact do you think this could have on the euro dollar?
Okay, well, as I said, the euro dollar is now 139.5. I think it's going to touch 140 very soon, perhaps some point this week. Now, earlier on Q1, we were in a trading range 136 to 138, and it started ticking up slowly. So for short-term traders, they should be looking to pick up euro dollar around the 138 level, and it's likely going to go to 140. Beyond 140, there's going to be a lot of stops, 140.5 up to perhaps 140.70. And we'll see a short squeeze up into the 141 area. So short term, you should be trading it from the long side, buying dips. Longer term or medium term, I suggest this is still a sell. The euro is too strong against the dollar for its own good, but the problem is the dollar is still quite a weak currency. And until one of these or both alter, we're still going to see this range of about 138 to 140 hold.
Okay, and moving on to the Swiss franc, what sort of trading trends are we witnessing?
So dollar versus Swiss, this is the same situation for the dollar as I've just spoken about. We've got a geopolitical situation in the Ukraine. We've got the Japanese VAT hike, which kicked in last week, and we've still got uncertainty over the growth in China. So these things are all affecting the dollar. So the dollar Swiss is in a downward sloping trend. It's gradually getting weaker. It is moving down towards 87 level, 87.5 level. It's a very difficult one to buy short term. Medium term, it's definitely a buy opportunity once the dollar does pick up with a target of around 93 or 94.
And lastly, looking at the pound, now we have the BOE meeting this week. So what are you expecting to see? What sort of response?
Well, Mark Carney and the Monetary Policy Committee of the Bank of England will be delighted with the recent activity in the UK economy and with the strength of sterling. We look back to last summer and sterling was struggling to break the 154 resistance level, strong downward resistance, and it broke that against the dollar and it's risen up to around 168 level. I expect that will target the 170 very, very soon. We've had some very strong manufacturing data and the economy is starting to look more positive. So once it tries the 170 level, it's down to whether we can see continuing strength coming through in the UK economy and if the US dollar wants to start strengthening or stays weak.
Chris, thank you very much.
Thank you very much indeed.
And thank you for watching Dukas Galway TV. Now, do stay tuned as we have plenty more heading your way. See you soon.